I'm going to record this session if you guys don't mind. Okay. So NVDA, was it NVDA? What stock was it? I forgot. This is not efficient. Okay. NVDA. There we go. NVDA. Okay, so with NVDA, did I say that right? Huh. Give me 1 second. I might have copied it wrong. Yeah, it's NVDA. Why can't I find it? It's supposed to be around. Oh, okay, that is the right stock, 697. Okay, so earnings. Okay, so as we can see in the earnings, they consistently beat earnings. Let's look at it graphically on Yahoo Finance. There it is. Okay, so they consistently beat earnings 21 cents, 34 cents, 29, 38. So they're going up and down. Okay, what is going on? Let me refresh the page. Okay, there we go. What is going on? This is weird. Is my screen messing up for you guys? Like, does it look messed up? There we go.
Yes, it looks messed up.
Okay, yeah, I thought so. I don't know. This has not happened before. Okay, there we go. So it looks like they're beating earnings consistently, 21 cents, beat it 34 cents, and their earnings estimate seems to be climbing. And but not too significantly. So this is an okay stock to consider. So let's look at the charts and see buy-in. All right. How long have they been out? Did they IPO within since all the way down here in 19? Okay, so this stock is probably not going to be a candidate just because of how I trade. It's not going to be a candidate for me to actually buy, to actually trade or buy. But I will look at it within the last 52 weeks and see if it has doubled. And if it has not doubled, I am definitely not gonna buy it. And it has not doubled. So, oh, wait, close. Okay, so it's not in the comfort zone for sure. So this stock is not one of, it's not a stock I would buy, even if, yeah, it's not a stock I'll buy. So let's look at a different one to see. Close this. See. And there we go. Let's look at QFIN. QFIN. All right, this seems to be a very strong stock. Everything's A99 is the highest rating you can get on this platform. Now we'll look at the earnings to get a visual picture and see how they're doing with earnings. QFIN. Okay, it's not graphical, which I don't like. Yahoo Finance. It seems like they are probably a very new stock that just recently IPO'd. Yep, definitely. Okay, so we can see their earnings grows drastically, which is a good thing. So 15 cents, 42 cents, 23 cents, 58 cents. They beat it by a lot, which is pretty pretty good. This is definitely a stock that I would, of course, there is something that went on here that the estimate went way lower, but uh, they outperformed that by a lot, which is really good. So I'm going to actually look at the charts of this stock and starting our community portfolio. I may actually just trade this stock. So it's called QFIN. QFIN. Okay, yep, it's in an all-time new high spot. Has it doubled in within a year? So within the year, the all-time low spot to the all-time high spot, has it doubled or more? Let's check. More than doubled, over 200% return already. Great. This is a stock that I'm going to start a new watch list, and we will use it for watch list personal. And we're gonna call it fly dash elevated meetup. Watch list, trading watch list. There we go. All right, so for this Q, oops. No. QFIN 360 Digitech ad. There we go. Okay, QFIN. All right, so this is definitely a stock I'm going to watch and trade. Now, I did miss the buying opportunity, which would have been right above this line, just right above it. So I see that is continuing. I am not going to buy it at this moment, simply because it's first of all, let's take a vote. How much should the account start with? I put 10,000. Is that okay with everyone?
Yep.
Yes, no.
Yep, it's good.
Okay. Yeah, because it's pretty reasonable for the average person. I think. So like this is a stock we're probably going to use to trade. I'm also going to add Yeti to this because that's another good candidate. Okay, so it seems to be powering off. That's good. I'm going to wait for a pullback because I already missed the buying opportunity where I'm comfortable at. Buying right here, I don't know when it's gonna make a pullback or a correction. So I'm just gonna wait for a pullback to come up and see if I can get into it. Then there is Yeti. This stock already checked through the financials. Very good. It's already today. It already came back to the all-time new high line. If you guys want to see the weekly, I put the line starting over here where. Let's go back to daily. No point in the weekly. But yeah, right here, it came back here, which is good. So let's see. If I was to buy this stock, where would I set my stop buy? Now it's all the way back down here. So there are a couple of places I could set it over here. So when the stock comes back, it will buy in, or at an all-time high if it keeps this high spot for 3 days or more. So since we're back to the and I say that because that's the Nicholas Darvis method, but since we're back to close to the all-time high mark, what I'm going to do is to actually set a buy stop right above this green update right here. So let's see. Buy Yeti. Now I don't want to buy it with just all the money in my portfolio. So this is where money management comes in. So what I'm going to do, I don't have a pen, so I'll use a calculator. Okay, so I'll bring up my notes and a calculator. But what I'm going to do is to take first predetermine how many shares I want and how much I want to spend on it. So for me personally, with the amount or portfolio this small, $10,000, I'm going to not. I don't want to own more than probably, let's say, two stocks, one or two stocks at a time. So, like, let's say you had a portfolio of 50 million. I personally, with that much, would not own more than four stocks at a time. So over diversification lowers your performance, and under, like, okay, I'm just gonna say, to diversifying is for people who don't know what they're doing. Like listening to, they trade like a institution, and institutions are institutions. So institutions should trade like institutions. We're not institutions. We can buy in and out of stocks very fast and easily, where institutions takes months. So they diversify, and they can't like focus all in one stock at a time. So what I'm going to do is to, let's say I want to do this by shares. Let's estimate half my portfolio. Let's say we're going to trade two stocks in this portfolio. So what I want to first do is to buy 25 shares. 25 shares, because even though I want to use half of my portfolio, I'm already committing. If this trade goes successfully, I'm already going to commit half my portfolio to the stock Yeti. So because of that, I am going to start with half of how much I'm going to commit. So 25 shares. Where's my pen? I don't have a pen with me. Okay, so first I'll buy 25 shares, which is half of the full amount I'm going to buy. Then actually I did create to make it simpler, I did create a spreadsheet that would Google Drive. I did create a spreadsheet that will help anyone. Startup files, elevated files. No, where did I put it? Capital money files. Startup files. Entering files. There we go. All right, so trade planner. Okay, so this is, I was developing this for anyone who wants to use it. So Yeti. So I'll demonstrate how it works. So let's say we're going into Yeti. We're going to buy about 25 shares to begin with, and the buy price about, now does the put in a stop buy or a stop limit. Let's start with stop limit. We put in a stop limit buy. The stock might not execute, or the buy order might not execute at that exact price. So we will have to go back to our spreadsheet and change that number at the exact price that it did execute. So let's say I want to buy at the top of this tick mark right here. The high was 91.55. So probably 91.57. Typically you want to go within 10 cents above, or yeah. So 91.57. Let's see. 57. And I always put my limit around 3 to 5 cents over. So let's go 5 cents. And we're going to do a good to canceled order. And let's see how that looks. Blah, de, da. There we go. So just right here, there's a good chance that our stock will not execute, but if it does, great. If it doesn't, we'll find another buying opportunity. So 91.57, I'll put that in my spreadsheet. Buy price is roughly around 91.57. We will come back here to change it. Now stop. When this stock executes, when this buy order executes, we never want to not have a stop loss order active. So our stop loss order will be no more than 10%. That is our limit and our absolute pain point. We will never, ever go below 10%. Go above 10%. So even better, if you really know how to trade and you have your you know your technical analysis very well, you can do something like 5%, which is very, very good. Which means you further mitigate your risks. But let's for now do something like 7%. It's a sweet spot. Now, this secure point is made by ×3 of our risk, and I'll explain how that works. But I'm going to do ×2 for now because I'll explain why in a second. So how that works is it takes the our buy price and our risk, our percent loss. Actually, let me make it ×3. Okay, so it takes our buy price and our how much we're risking in terms of our stop loss, and at that point is going to calculate the amount. So let's say 9.91 was calculator. So it's going to take 91.57 and multiply it by 0.07, 6.4. Now it's gonna multiply this 6. So that means we're taking a $6.04 risk on this stock. Now we're going to multiply it by 3. Now, the reason why I choose 3 is because you never want your stock to increase by multiple and not at least secure your profits. You don't want it to increase by a multiple of 2 or 3 and not secure your profits. I chose 3 because it's a wider range. So $19.22. If the stock goes up by $19.22, I should at least set my stop loss to break even. If not, I don't see an opportunity to move it up like in a Nicholas Darvis's box theory. So what I'm going to do is to add 19.22 plus 91.57. And that is how I got this number, 110.80. So it just tells you where to set your stop, at which price you should move your stop loss up. So again, when the stock buy triggers, I will set my stop loss immediately after at no more than 85.16. Now, if that's with a 7% risk on my stop loss. Now, if anything, I never go above 10% risk. And that is a hard fact because once you go over that, it gets really hard to make your money back if you lose the trade. Hope that makes sense. All right. So we've gone into this stock, and I am only going to focus on one stock at a time. So if this trade doesn't trigger within, let's say, a day or two, then I was wrong. I canceled the trade, look at another stock, because I could, let's say this stock skips over my buy stop. I was wrong at the point I was going to buy that. So does that mean I should chase it? No, I'll wait for it to set up again, and then I'll look into it again to buy. Now this stock, it's already up here. Should I chase it? No, I'm going to wait for it to set up a proper buy spot before I buy, if that makes sense. So now we're already looking at a stock. I'm good. I'm done for the day with this. And let's see what else we had scheduled to talk about in trade simulation. And now we can just,
could you put your watch list that you've been picking these off of in the chat, so I can look at the rest of them since you're done it with this?
Sure. I
Okay,
will.
thank you.
No worries. No worries. I'll actually do that right now.
And also, I like some explanation of your spreadsheets of what they do, So
Okay.
that maybe I can, okay.
I can share that too. Give me 1 second. So change link. Anyone can have it. Copy link. Okay, so these stocks, I every Sunday I pick stocks and put them on the 5 stocks and put them on this watch list for people. Oh shoot, where's the chat? There we go.
Could you also put your email list in? So maybe if I have comments or questions, I can share them with you.
Sure. Actually, I want to take this opportunity to share that I do have a Patreon where I offer a lot more services because I'm trying to build a platform to help new stock traders, and to raise the money for it. I started this Patreon, so it will be actually helpful. It's not like the first tier is not too expensive, but it will be helpful to raise money to build the platform if you want to look through what I have to offer on Patreon and stuff. Like for instance, I give every day a market trend analysis, and just posts general tips, and also I this watch list and everything is included, and also every Saturday I put up a newsletter. So it's pretty helpful. So if you want to have access to this, you can see what I have to offer, and I'll put it in the chat. There you go.
Okay.
You can look
thank
through it. Cool. All right. I think that is all for now. So let's go through a simple buy sell simulation, and we'll keep watching this this portfolio and see what happens in the future. So let's look at pick a stock, any stock. What comes to mind? I'll pick a stock that we look at. Okay, so let's look at this stock actually, and zoom all the way back to a random spot so we don't know what happened within, and we will trade it with the analysis. I mean, we'll trade it of right now. Give me 1 second. Okay, look, seems like I might have gone too far. I don't know where this chart starts. There we go. Okay, so it starts over here. Okay, so first thing about trading stocks, you never want to there we go. You never want to buy a stock. I like to trade on the weekly time frame, by the way. So I'm gonna switch to week. So so it's what's it called? I usually buy on the daily, trade on the weekly. So it makes sense that way for me. So first, you never want to buy a stock that is not in a stage 2 uptrend. And if you know Stan Weinstein's stage analysis, a stage 2 uptrend is when on the weekly time frame, the stock is trading above its 30-week moving average. So let's look on the weekly time frame. This is the same thing as the 150-day moving average on the daily time frame. So let's look at when the 30-week moving average comes in. Now I put okay, that definitely just shot up. I'm not in this stock yet, by the way. So I put this at an all-time high, because for me personally, I only trade all-time highs, because stocks in motion tends to keep going in motion in the same direction until something drastic happens to change its course. Now, this is contrary to what most people believe, or most people say, buy low and sell high. The fact is that you actually don't know where that low is, or even if it's ever, you never know when that low is ever gonna come. Because you might buy low and then it just keeps dropping lower, losing your money, losing your opportunity. Because you may say, I'll never lose money until I sell. Yeah, but you're not making money either, because the money that you have wasting going lower and not selling, or cutting your losses short, it's not money you're using to grow, or that's a stock that's actually going up. And I hope that makes sense to you. So let's see. So right now we didn't yet see the moving average, so this skipped it. I'm going to put my new all-time high right here and see where I would go in. Okay, so there we go. The 30-week moving average has come in, and we see that this stock QFIN on the weekly is in the stage 4 downtrend. A stage 4 downtrend is when the stock is trading lower than the 30-week moving average. So let's keep going and see what happens, because I am not going to buy the stock no matter what at this point. Because let's say I thought this was the low point. Let's see what happens. If it keeps going lower or it keeps going higher, I have no idea what will happen. Okay, so you see it's crossed above the 30-week moving average, which means it's in a stage 1. After stage 4 comes to stage 1, where the stock moves sideways. After stage 1 comes to stage 2, when the stock is moving upwards, and that is when you want to buy. Now, I said I only buy stocks personally on my portfolios. I only buy stocks at all-time highs. I don't know if this stock is going to make it to an all-time high before anything else, but let's see what happens. It's still in the stage 1. It seems like it's bad. Okay, see, I thought this was the low point, but it seems to be going lower now. So it skipped over the stage 1 and went back into a stage 4 and is going lower. This is the reason why it's dangerous to try to catch the low of a stock. The only time I would try to buy at a dip or the downwards is when I see the beginnings of a stage 2 uptrend. When I see that is okay. This stock is probably has a good thing coming. So let's see. It's still in the stage. Okay, so now we're entering an official stage 1. It looks like, because we're trading above and below the 30-week moving average, and bam. Now we can see that the 30-week moving average is starting to move upwards. It's starting to look upwards and it's going sideways. So this is a clear stage 1. Now, I personally, on my portfolios, I only trade at all-time highs, which is another story. But for now, this simulation, I want to make an example of what happens when you trade according to the trend analysis. So I'm going to set a stop here. Let's say this is a buy stop, right? And by the time it moves into this buy stop, the stock should be in the beginning stages of a stage 2. Just because of experience in the markets, I can tell what is happening. Not what is going to happen, but what is happening. Now, I lied to you not. I'm going to change this to a green first. If this stock does not enter a stage 2, I am not going to hold it for the life of me, because why would I hold a stock that is not going up in price? That's just dumb. I'm sorry for that language, but it is just dumb. Like, why? So let's see. Okay, so a buy stop triggered over here. So I would set, it was at 1070, around 1070. So what I'll do is to calculate, bring my calculator out, my calculator. And 10.70 times point, well, that's 10%, 1.07. Okay, so 10.70, 10% is 1.07, 10.70 minus 1.07. We want to set our stop loss at 9.63, no lower. That is our absolute maximum we'll ever want to take a loss on any on a stock, 10%. So I'll put my stop at 9.63. Let's see, right, 9.6. Okay, somewhere around here, right? So 9.63, and I'm going to color this red to, whoops, 9.6. Why am I making this complicated on myself? I'm going to color this red to indicate 9.6 to indicate our stop loss. Right. All right. So right now we're bought in over here and our stop loss is set over here. Let's see what happens. Okay, we're in the positives. Now we're in the positives. We have proven that this stock is going to it's making us some money. And once it's making us some money, remember how how on the mock portfolio I said we'll buy 25 shares, but we actually wanted 50 shares for that stock. Now within a 5% move of the stock, you can do it several ways. So within a 5% move of a stock, I am going to buy in with my full position. So it could be when it moves up 3%, I buy the 20. I first start by buying the 25 shares, or however half of my portfolio that I want to invest into it. I mean, yeah, half of the amount I've already set for it. Now I first go in for 25 shares. When it moves 3%, I might buy another, let's say 15 shares. And then when it moves another 10, when it moves another 2%, which is within the 5% range, I'll cover my position, or I'll fully buy into the position that I wanted at that point. Now, there is that way of doing it. And then there's also the Nicholas Darvis box theory way of doing it. So for this example, I'm going to use Nicholas Darvis's box theory. So let's say I bought X amount of shares of the stock at this point. It's gone up a little bit. So I will set the ceiling for this ceiling that it broke through, the stop, the all-time high. I mean, not all-time high, but the beginning of the stage 2. I'm going to set that as a new floor because the stock is trading above it. So our stop loss is over here. Now, when the stock reaches, let's do our calculation really quickly to see when we're going to break even. Calculator. So our risk was 1.07, I believe, right? Yeah, 1.07 times 3, 3.21 plus 10.70. I don't usually buy on the zeros, by the way. On the zeros or fives, I would usually buy on the 2, like on the 3, 7 or whatever, like 73 or whatever. But this is just an example, so I'll let it slide. So when the stock reaches around 13.91, I definitely want to make sure I am at least broken even, if not at a point where I have secure profits. So you can do it by a ×3 or by ×2. I like ×3 because it just feels better. It's a personal choice. A lot of people, I would actually recommend ×2. Once the stock has gone over ×2 of your risk, never, ever, ever let it go without at least securing your profits. So let's go next take and see what happens.
No, I have a question, champ.
Go ahead.
So when you say that you want to make sure that you break even, if you bought at 1070 and the stock goes to 13 and change, is it possible that you don't have a profit?
No, that's the thing. Once the stock goes all the way, I'm talking about your stop loss. You want to make sure you don't break even by moving your stop loss. I'm sorry. You want to make sure you do not lose your profits, or at least you will not lose money on this trade by moving your stop loss to at least break even, at least.
And what price is break even? How does $13, how is that break even?
No, that is not break even. So our buy point was at 1070, right?
Right.
So when the price moves to ×2 or ×3 of our risks, I chose ×3, which is 13 something, right? I'm going to move my stop loss to at least $10.70 plus the commission I paid.
Okay.
That's break even.
Okay.
Okay. So let's see. Bam. Okay. This is great. Now I see a huge bar, which means this was probably an earnings movement or something. So I'm going to move my stop loss to more than break even, which is taking a little bit of profit, because you can move your stop loss based on 2 things. Visually, meaning if you see an opportunity, or calculation wise. Like some people like to take profits on a 10% move. Some people like to take it on a 50% move, depending on the stock and how the stock moves. For me, I like to take it on opportunity. Opportunity. I'm an opportunistic. So until I see like an exhaustion happening, I am going to give the stock enough room to fly. Until I see the stock starting to change trend, I'm going to give it enough room to fly. So you typically see that I move a stock's stop loss visually. So let's go to the next take more. Okay, next one. Okay, it seems like a huge sell, but we didn't sell off yet. What do I do now? I'm not scared. Okay, we are sold out. See, we didn't make much on the stock. Hold on. Give me 1 second. Okay, hello, can you guys hear me? Okay, I'm back. Okay, so now we did sell out, but the thing is that we did not lose much money, and that is key. Now, this also explains this little movement of selling out also explains why I do not like to buy stocks out of the all-time high zones, because companies like to take profits. And when they like to take profits, like you see, we probably met a resistance. So where did we start selling off? Around here. And around there. So stocks, they usually like to take profits at resistance. There we go. You see the resistance line around right over here at this point. So at this point, they took profits. This is exactly why I don't like to buy below all-time new highs, because there's all these resistance lines and companies are like, we made our money, let's take profits, let's take profits. And that could you could be fighting an uptrend battle or whatever, going up and down and up and down. I don't like that. I like smooth rides, you see. And that typically happens at all-time new highs, because there is no resistance above for a stock brokerage to be like, okay, I want to take profits now. So yes, we didn't make too much on this stock, but the important thing is that we didn't lose much. No, we didn't lose anything. We actually made just a little bit. Oh well, we didn't lose money. That's what's important. So to me, this is a successful trade. Now, let's see what happens next week. So we see that this stock has gone into a nice cup and handle. So my next buy point for this stock will be probably right above here. This right here, because this is a high that is taken within the last 72 weeks. 52 weeks. Why am I messing up my words? So this is a high within the last 52 weeks that it has held for three bars or more. So let's see. Going sideways. And we're coming back up. Great. So my buy stop got triggered. Perfect. We're back in the game. Now we could have bought over here and we could have bought over here. It depends on if you how you trade. If you count the lines as part of the important data, I guess you could say. I used to do it as like I would probably buy over here, but I've changed that's all preference depending on you. No one is absolutely right. No one is absolutely wrong. We're all going to be right and wrong at the same time. If you think you're going to be right more than 50% of the time, go take a chill pill. Like you're not Houdini. Okay. So again, so we bought around 18.07. Again, this is just rough work. So calculator. So 18.07. That's 1.87. I don't even need to do that. So 1.8 18 18.07 minus 1.87. So absolutely, I will not let my stop loss. Did I do that right? Yeah. 18.07 minus 1.07. 17. There we go. So absolute. No. What am I doing? 18.07 minus 1.8. 18.0. 1.8. There we go. 16.27. That's right. Okay. So I do not absolutely want to let my stop loss drop below 16.27. The simple reason is because once it gets more than 10% of my buy point, it's going to take me 11% return to get it back. And it only gets worse because think about it. If you lose 50% of your money, you need 100% return to get it back. We don't want to keep taking losses. So 16.27 is our absolutely maximum. And this is the last example we'll do because it's past time. 16.27, somewhere around here for a rough sketch. Okay, so next bar. Woo! Okay, at this point, I am definitely moving my stop loss over here. We're in the profit zone. The stock does look super hyper extended. Now, just from experience, I had a move like this. Of course, I'll think something like earnings happened, but look, it broke out in higher volume. Like the volume seems to be rising greatly. So this is probably a good sign. We're in the beginning of a stage 2 uptrend, and we have just crossed our all-time new high that we had set before. You see? So we've crossed an all-time new high. This is all sounding good. And we broke out on very high volume. These are good signs, very good signs. Now, if I was paying attention, I probably would have set a buy stop above here also, but I didn't. Oh, well. So what would I do at this point? I moved my stop loss below this huge bar, not expecting the stock to go below, to sell off from this huge run up. But if it does, I lose very little. Oh well. All right, so we see that we have passed our all-time new high spot. So what I'm going to do is move my stop loss right below our all-time new high, right below it. Now, how much have we made so far? Whoops. Whoa, no, we bought around somewhere here. Okay, so roughly we've made about, let's say somewhere around 20 to 25 to 27% on this stock. Now the stock is all the way up here, and let's see what I'm going to do next. So at this point, I see that super extended. Like this is crazy extended. Like, why am I even going to hold on to the stock? Do you see how this is just shooting straight up? This is just indication that there's going to be a huge sell-off. So actually, I'm going to be smarter and not keep my stop loss over here and actually move it up here because I sense something bad is going to happen. So right below the close of the day or week over here, I'm sensing like something bad is going to happen simply because we're super extended. Like, look at how ridiculous that is. So I'm going to set it over there, and so roughly we've made about, whoops. Yeah. We've made about somewhere between 30 to 40%, let's say, on this stock, on the money we have put in. We didn't find any opportunities to buy more shares or to go in with using the Darvas method because we got sold out over here when we initially went in, and we didn't get another buying opportunity, and this was just bam, overextended. So I'm looking for opportunities to get out of this point, because and keep as much money as I can what happened? Exactly what I thought would happen, being overextended. So we've made our profits. And now I'm going to set a new buy stop at the all-time high again. And that wraps up our lesson for today. Now, this stock is very, very volatile. And it seems like yeah. So it seems like it's getting ready for another. Okay, there we go. Now, do you see how it was overextended? It corrected, and now we're at an all-time new high again. This is a perfect setup, and we are at the absolute all-time new high. This is a perfect setup. If the fundamentals of this stock is good, I am in. I am buying the stock. I love it. I love the movement right here. We're at all-time new high. It should be consistent. Very strong. Like a nice cup and handle. Like I don't even know what to say anymore. Like if the financials of this stock is good. So let's check the financials. Again, we've already missed the buy spot, but we can wait for a pullback. But this is a stock that I'll actually watch. Let me put in the watch list. Watch list. Personal. Where is Fly Elevated? QFIN. I guess we already looked at the financials for this stock. Okay, cool. So I'm going to stop sharing my screen, and we should look for a buying opportunity for this stock. So we'll check it next week and move on from there. Any questions? If no questions, I'm going to repost this survey. Please, guys, I really need you. I'm trying to build a platform that will help. That's supposed to help new stock traders perform very well in the market. So I need your input, and if you're willing, this is for you guys. I'm basically building this stock platform for you guys. It's a social trading platform. So if you have a quick minute, I need your input to I put a link in the chat. Just click it, take a quick survey. It won't take more than 2 minutes of your time, and move on with your day. So if you guys thought this was a helpful experience, I hope to see you next week. Again, every week we go through a set amount of things. We stock analysis, market analysis, trade simulation, and a community stock portfolio, which we have started just today. Cool. All right. Any questions? Yes, no, maybe so.
Yes.
Cool.
It took less than 10 seconds to finish that survey. So just
Thank you so much, man.
you don't need 2 minutes for that. No.
Please, yeah. So and I think there was a question like if you want, like if there's just something you want me to build, just tell me and I'll consider it. Like it just depends on how many of those recommendations I get, and I'll build it. But yeah, I'm building a platform for you guys, so just please take your time and fill
And
it.
lastly, the spreadsheet you had up there, is it something that we can have access to, or
Yeah, sure. The trading spreadsheet or the
Yeah.
stock watch list?
not
trading.
the trading? Yeah, the one with the stop.
Okay. I'm going to put that in the. Please, when I'm going to share with you, but make a copy of it. Like
Okay.
don't edit it.
Download a copy. Okay, I'll just download a copy because
Okay.
you already have the formulas in there. So
Yeah. Remember the secure point, you can make it ×2 or ×3, but here, let me share it with you guys. Change. Anyone with the link, viewer, copy link.
I love your office, by the way.
I thank you very much, you know.
It's a small business for real, for real.
All right. Okay, here's the link to the spreadsheet. Okay, thank you so much. I hope you guys have had a good experience, and I hope you go ahead and fill out the survey.
Yep.
If you don't have any questions, I'm going to log off in like 10 seconds. Give you guys a chance to click the links, download what you want, and if you find any problems with the spreadsheet, please let me know next Thursday, and I'll fix it. Experiment with it, put in fake data, whatever, and stuff. So again, 10, 9, Oh, check out what I have on Patreon, please. I do trade a separate portfolio. You have access to those trades and everything. So yeah, 5, 4, 3, 2, 1. Have a great day, guys, and enjoy
You
your
too.